Hello and welcome. So today we'll take a look at bull flags, how to trade them and how your approach should be when you're trying to trade bull flags, and how your thinking should be, how your thought process should be, because there's a lot of examples out there, but they're all a bit superficial. They're very static examples in a very dynamic market. So therefore, we will take and dive into a much deeper look at how to trade bull flags. Okay then? Roll the intro. Okay guys, a bull flag. Let's start with the basics here. So when we're talking about a bull flag, what we're talking about is a structure, a pattern that looks like this. We gotta move up, an impulse, an uptrend, followed by a pause in the trend, and then another impulse up, or the continuation of the uptrend. Here, this thing in the middle here, this here is the bull flag. This is the pullback, this is the correction, and this is what we're looking to trade. We're looking to get involved in around this area. But this here in itself is very superficial, and we need more data than just this to trade a bull flag, because every bull flag is unique. Okay, how many times have you guys not taken this kind of trade where it's done this? You find the move up, then you find the correction or the bull flag or the pattern in here. It comes up and it does this, retraces right back. This happens because trading is a game of probabilities. And with that in mind, you have to look for high quality bull flag setups. But what is a high quality bull flag setup and how does it look like, right? So let's take a look at that in more detail so that you guys will get a better sense of what to look for when you're looking for bull flags. So let's take a look at an example here. Let's deconstruct what a bull flag is, or a bull play, and how we should approach trading setups and plays in general. So it's all about having a layered complexity approach to trading. When building a trading play, you start from the analysis, which is your strategy, and this is where you create a contextual framework. Basically, you put the data that is present on your charts, as you see here, into context, and you create high probability directional biases. If you have been following my channel, then you know that the way that I create context is by using pattern analysis, wave analysis. So when I look at patterns, at charts, I look at the higher time frame and I work my way down. So this is a very simple chart here. So the way in which I create context, I look at this here. I see there's a move up, there's an uptrend, followed by what looks like a possible pattern, right? We could come down, go up, and this would be a regular flat, or it could make an go up, come down, make some kind of other flat. There are many ways in which this can unfold, but I always do my analysis and I look at these patterns from the most simplistic approach that this pattern can take, or from the most simplistic way that this pattern can develop. And then as I get more data on the charts, I adapt and I adjust my pattern analysis. So what is the most simplistic way in which this pattern can develop? As of now, we got a push up. This could be a contracting flag. And you also have to understand each instrument, because each instrument has its own way of creating, of forming patterns. So some patterns can be more likely to develop than others depending on the instrument that you trade. Okay, back to the topic. So you start from the top, you create context. So this is what I know from looking at this pattern here. Uptrend, a possible continuation structure, which could be followed by a move up. So for the moment, my directional bias will be up. But at the same time, I am aware of the possible scenarios that could unfold. So if this comes down here, I will not be surprised, but I will adjust and I will be like, okay, pattern is just getting a bit more complicated, no problem. But as of now, this is the data that I have. So with that in mind, I'm gonna go to the 1 hour. Now I have to dive in. I have to dissect what's happening on lower time frames, because I have to look for whether my play is present or not. And in this case, I'm looking for a bull flag pattern, okay? We're looking for a sharp impulse followed by a correction, because we have some context, uptrend possible through a continuation structure, and now I'm gonna see whether there is a pattern that I can trade. So I have an impulse here. You see, if we go down to the 15-minute, okay, we missed a play here. There was a little bull flag right here. And if I play this out, let's play it out, play. We see that, okay, something is forming here, right? Another possible bull flag is forming right here. So as of now, we have two components. We have the higher time frame, which is our analysis, our wave analysis, pattern analysis, or in however which way you create context. Then I dive in and I look for the pattern, for the specific pattern. I'm looking for a bull flag pattern, right? Which is an impulse, correction, and then I'm gonna look for another impulse, which is more likely to happen because it's backed by the higher time frame analysis, which points toward upside or a possibility for upside. But just because that this is forming, take a look, I'm not just gonna randomly buy it, because now a third component comes into the picture, which is we need specific reasons for entry, because we cannot just enter randomly. It's important to have a consistent approach, so we need specific entry triggers. For instance, this could be something as simple as the bull flag pattern, but in confluence with the pattern bouncing of session VWAP, for example. So if I plug in session VWAP, okay, we see that we're clearly above it. This indicates that bulls are strong at the moment, intraday, because the intraday price action must be aligned with your views, with your higher time frame view and your pattern. This is how you create a high quality play, by having multiple variables and understanding that it's not just about the variables, but it's also about what's happening intraday. Who's in control? Who's in control right now? Bears or bulls? Because why would I buy? Let's say that the price action was coming down here below VWAP, okay? Why would I then buy this? Even if I have this higher time frame view, right? That there's a possible pattern going up here. Then you go on the 1 hour. There's a possible bull flag forming. Should I buy? Well, the third step would be, who's in control? Is there any reason for buying right now? Where's VWAP in relation to price? Where's volume? Are we bouncing up an important high volume area? So this is where layered complexity comes into the picture. You have to put together different variables to heighten the probability of your trade setup or play. So let's take a look at what happens here. Price spiked up above this session VWAP here. So we see that this was also a bull flag right here, and you could have got involved in this around this area based on following variables. Okay, let's just sum it up. Let's go to the 4 hour. Okay, we have an uptrend right here. We have what looks like a possible 3-wave structure. So we're looking for continuation of the prevailing trend, which is this trend here. Okay, then we know that there are different subsets of this pattern, that this could have come down here or even broken this low and gone up here, and even now there's still a possibility that this might, make something like this. So there's so many ways that this can develop, but we identify the price action and we trade the price action. We don't trade our own projections that we put onto the market, okay? So context is we're looking for an up move, a continuation play, okay? Then we go to the 1 hour and we look. Is there some kind of bull flag forming? If you go down here to the 5 minute, we clearly see that we have an impulse and we have a sideways correction. Okay, then how do I get involved? Then you use tools like VWAP, for instance, which is not working right now for some reason. Oh, there it is. To get an understanding of who's in control currently. Or you can look at volume profile to see and look for high volume nodes. So you have to put together variables that make sense to you. It starts with your overall strategy, your analysis. This is where you build context. You create a contextual framework. Then you have specific plays that you trade. It could be a bull flag, it could be a bearish flag, it could be a support resistance bounce play. And at last, step 3, you would need the intraday price action to align with your play, to align with your analysis. And then of course, let's not forget, when you are in the trade, you have to manage the trade, you have to adjust and adapt. For instance, if you bought here, this spiked up, what is your next step, right? Will you take some profit off here and then move your trade to break even? Because if we go on the higher time frame, you realize that there's a pattern here and your target area could be all the way up here. So how do you approach trading it? This is also very important. If you are prepared, you will not act emotionally, or at least you will minimize emotional impulses, because if the structure does something and it's very unexpected for you, then you will react. But for example, by taking partial profits, you will protect yourself in the sense that you have already booked some profit. So if the position suddenly does this and sharply reverses, you would be out of the trade with some profits, and that is very helpful for our psychology. So remember, the trade does not end when you have bought or sold something. That is when it begins, right? You have to perform when the price action is moving in real time. That is also a very important element. So remember, strategy analysis, trading play, trading setup. Then you apply your specific entry triggers, which could be bounce off VWAP or bounce off a high volume area. And at last, you manage your trade and you adjust and adapt. So I hope that this video will bring you some value and that what I'm saying makes sense to you. Thanks for watching, guys, and see you next time.